Crypto gifting is picking up this holiday season, and I keep hearing the same question from Canadians. If I send my kids some ETH, will the CRA care? Well, I've broken down CRA's official guidance, and I'll show you what actually happens when you gift crypto. So, before you send that token with a heartfelt note, let's look at how the CRA actually classifies that kind of generosity and what it could mean for your taxes. Hi, I'm Charlene Tessier, your Canadian crypto tax expert. Every week, I help crypto investors file accurately and avoid CRA problems. This video is for general educational purposes. Everyone's tax situation is different, so always speak with a professional about your specific use case. Now, you might think gifting crypto is like handing someone a $50 bill. It's sweet, it's simple, no tax issues. But not so fast. In Canada, crypto is considered a property. So when you gift it, the CRA sees that as a disposition, just like if you sold it. And yes, that means it could trigger a capital gain even if you never saw a dollar hit your bank account. So before you wrap up that shiny ETH for your niece, here's what actually happens when you gift crypto and what the CRA expects you to report. Now, let's break this down starting with family and friends. Gifting crypto feels so simple, like handing someone $100 with a bow on it. But in Canada, it's not quite that clean because crypto is considered a property the moment you transfer it, even to your spouse, your kid, your best friend. The CRA sees that as a disposition. And that's just a fancy way of saying they treat it like you sold it. Even if you didn't make a dollar from the exchange, so that if the coin went up in value since you bought it, that difference, that's a capital gain, and it's you, the giver, who reports it. So let me paint you a quick picture. Let's say you bought some Bitcoin last year for $1,000 and it's now worth $2,000. You think, you know what? I'm going to give my brother a bit of Bitcoin for Christmas. That is way more meaningful than a gift card. Sweet gesture, right? Except the CRA sees that gift as if you sold your Bitcoin for $2,000. That's a $1,000 difference. That's a taxable capital gain this year, even though your brother got the token and you never touched the cash. Now, what happens to your brother? Well, he's off the hook. He just receives the crypto at its current market value, but the tax bill, that's all yours. So, yes, go ahead and gift crypto to your loved ones. Just know if it's grown in value, the CRA wants its cut. I would love to hear from you and find out if you've ever gifted crypto before, or are you thinking of gifting some this year? Let me know in the comments below. Now, what about donating crypto to a Canadian charity? This one catches people off guard because it feels like donating cash, right? You give, they get, you're done. But here's the twist. Because crypto is considered a property in Canada, donating it is still treated as a disposition. Yep, even when you're being generous, you might trigger a capital gain. But here's the good news, and it's a big one. If you donate to a registered Canadian charity, they're going to issue you a donation receipt for the fair market value of the crypto on the day that you donate it. And that receipt, it can offset the gain, and in some cases, it might even cancel it out. So let me show you what that looks like. Say you want to support a cause this year. Maybe it's one that accepts crypto through platforms like the Giving Block or Giveth, and you donate $1,000 worth of USDC. Now, because it's a stable coin, there's likely to be little to no gains. So yes, it's still technically a disposition, and yes, you'll need to report it, but you're also going to get a $1,000 donation receipt. And that means you can claim a tax credit, which can offset any gain, which there probably is very little of anyways. But here is the important caveat. You need to make sure that the organization is a registered Canadian charity. There are a lot of incredible Web3 nonprofits out there. But if they're not a registered charity, you won't get an official tax receipt. And for you, that might be a deal breaker if you were counting on that in order to offset your taxes. So, yes, donating crypto can be a powerful, feel good, tax smart move. Just make sure you're doing it with the right type of token and the right type of organization. Now, whether you're going to be gifting to loved ones or giving to a cause, here's exactly what to do to stay tax smart this season. First, you want to always check your cost basis. What did you originally pay for that token? If it's gone up in value, the difference is the capital gain, and yes, you'll need to report it. Second, if it's a big gift considered using a stable coin, no gain or little gains means no tax surprise. And it's one of the easiest ways to just simplify the math and keep your tax bill low. And third, if you're donating to a charity, make sure you save that receipt. The official tax receipt could reduce or even just wipe out any of those gains you might have triggered when you donated. So, whether you're giving to loved ones, or donating to a cause. Just remember, crypto might feel casual, but the tax rules definitely aren't. And this is exactly why I help Canadian investors navigate these gray areas. It's not to scare you off, but to help you give smartly and stay on the right side of the rules. So if you're planning to gift this year to a family or to a charity, take a minute to look at the numbers first. That one step could save you a surprise tax bill this coming year. And if you want to stay ahead of the CRA crypto tax changes in 2025 without drowning in the legalese, I have created a free resource just for Canadian investors. It's quick and easy to use. It's a one-page cheat sheet that shows you how to spot taxable events before they cost you. So we cover the big three: staking, swaps, and yes, of course, gifting. And you can grab it in the description below. Till next time, I'm Charlene Tessier. Here's to more crypto profits minus the tax stress.